Morning traders, welcome to the Traders Lab. I'm your host, Tom B. I am streaming from Mexico and I'm having some technical issues this morning. I'm going to do my best, but it is possible that one moment. Yeah, traders, I'm sorry about that. I'm in the middle of a technical issue. I'm going to try it on YouTube only because of resources here and see how we can do. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to try to go from here. Is the Okay, how we doing on YouTube? I'm not going to stream on Discord. I'm trying to save resources here at the moment. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. 1 second. Am I still going here in YouTube? Yeah, good morning, Ben. Good morning, everybody. I am technically challenged here. We're working on it, but we're in the middle of working on it. So I'm not streaming in Discord this morning, but going to do our best. As you guys know, Friday was a substantial event on the news of potentially 100% tariffs on China and that's still on the table. The market doesn't like not knowing. And when that happens, the market has to reprice. And for many traders, if you do not have a specific plan for the event, and this could be the same plan you pull out whether it's a known report like FOMC or PMI or something that can be a substantial market mover. And the other thing you need to know about is things happen, events happen. It can be geopolitical, it can be otherwise. And this, of course, this event is major for its economic implications. And the other part of that is, how does the market work under these conditions? Well, let's remember what the market is. It's a pricing mechanism. So what the market does, it takes everything it knows, and that means the participants, and that means all participants, those who, the hedge funds, the banks, the trade desks, us, everybody else, and we're on the low end of the financial food chain. So it takes whatever it knows, and the auction is basically what's too high, what's too low, and what's fair. But when an event comes in where the market cannot know what that means from an economic point of view, is it real? Is it just a threat? What is it? That input disrupts the perception of value. So remember, the function of the market's to establish a fair price, or what's value? What's it worth? Well, if we don't know the input, and we can't quantify what ramifications that might have from an economic point of view, which is what this is all about, then the market does the, we're out of here, we'll give you a call later. And that's what you saw on Friday, was what I refer to as the Acapulco cliff dive, and then some. So now we've had the weekend, and over the weekend, now there's a little bit, well, maybe, and there was some posts or comments made that, well, maybe this is just a starting point, but we're in a good position, the U.S., and, we'll see what happens. Well, that relieves some of the pressure, because for, let's just say, from a geopolitical or a economic point of view, this is not a good place to be, and it's not, shall we say, would be a popular event. So we are seeing a response to that, and that response is short covering. Now, we're still going to get a lot of volatility, and traders should understand that because of this volatility, risk elements are going to be higher, and you just have to know what you're doing here. And I also want to remind everyone, if you traded on Friday and you just started gambling, that is not how you're going to stay in the business. There are going to be days like Friday. And the prudent thing to do is, if once that market gets outside of your, call it your plan, and this is the whole thing about a plan. The plan isn't just get in here and let's gamble. The plan is, when is the condition of the market not suitable for you? When does it move outside of your plan? If it moves outside of your plan, you have no trade. If you're trading outside of your plan, it means either, number one, you don't actually have a plan and you've always been gambling, or number two, you're overtaken by chemicals or Hyde, as I call it, and you've thrown everything out the window and you're gambling. That'll take you out of the business. Professional traders look at this quite a bit differently. Either you know how to trade that environment because you have you've done the research, you have the experience, and you actually have a trade plan where you open in your trade book, if you have something like that, and it says reports, and then when you have outsized volatility, how do you cut size down to equalize risk? Or do you just go in here and just wing it? Do you use the same risk management? And that's just not only dollar-wise, but structurally. So when the market is kind of calm, you can use structure. When the velocity increases and the market is thinner, it'll overshoot structures that you might use successfully in other environments, but it won't work here. Do you know that? So if you don't know those things, why are you gambling? And does that mean you're going to sacrifice your potential career and having a business and sustainability for one day or one trade? I'm asking you the question because you need to have the answer. If you don't know the answer, then there's a problem. And how we do it on YouTube, guys, I am having a problem. Can I get is it stable? Are you guys getting audio? Is it breaking up? Is it okay? What's going on? Because definitely having some trouble. And if you guys are in Discord, use the link there. I posted the link to YouTube, and I'm trying to conserve resources here. And hopefully this will all get straightened out. I've had tech people here. I am in Mexico, so you know. And when I tested this yesterday, things were working, and I guess you know how it is, right? So it's good for you, Skag. Well, thank you. Okay. All right. Well, this is the RTH Open. Let's take a look at this. Thanks, Stephen. Um, let me see if I can. Hold on a second, guys. Okay, I'm not going to go on Discord, just so you guys know. I just don't want to destabilize things here. So hopefully we can get through this today, and then by tomorrow things will be better. So RTH Open. Now we had a short covering, basically short covering in the ETH, and it was up about 80 points or so in the ETH when I was watching it early this morning, and that means who's on the hook. So who's on the hook? You always have to ask yourself who's vulnerable. Well, if the market is short, remember I always say the market goes down to go up and the market goes up to go down. That's what our rotations are all about. Now, given this scenario, in my mind, the primary side to be trading from today, and this is not a recommendation, is the long side, because the market has a tendency, when it has a shock, it has a tendency to go back to where that disruptor took place. And you'll observe this on reports. If there's a report and the market does the Acapulco cliff dive often, if not the same day, and in this case, maybe not today, or maybe, the market will come back to the disruption once it's been digested. So that's another thing that you need to be aware of. But you do need to know that whatever you're doing, you know what your plans are, you know what your trades are. You don't know what the market's going to do. So it's really about knowing your plan. And if you're a professional trader, you really are waiting for your bus. If you get into FOMO, which you will have on almost any day, you'll experience it. But on a day like Friday, you're going to be so heightened by it. When you see those kinds of rotations, you have to recognize when you're getting into a state where your pulse is racing, those beads of sweat are starting to form on your forehead, and you're going, oh, I can make so much. As soon as you're having that voice in your head, you're already in trouble. You need to recognize, you have to learn about yourself. Learning to trade is only one part of this. The other part of it is learning about yourself. So first trades. Now, I looked at this morning. I'm not able to trade, obviously, from here yet. It was my intention to trade, but that didn't work out. So I'm going to show you some trades. Now, the first trade, I always say the opening is not a place to trade. So let's take a look at the RTH Open. I'm going to come back here. First trade I saw today was a long, and I always say developing traders don't trade the long side. And I also haven't had much chance to look at the market. You're going to see gaps in data, all kinds of wild things going on here. So this is called VPOC migration. And it's the first. Now remember, what do we know? We know the market is short. So if somebody is short, and they come in today, and I'm assuming everybody is conscious that what's going on in the ETH. And what do you see? You see the market's going to gap. So then if the market's going to gap, you might assume that that gap is going to get short covering right away. So an aggressive early trade, and the early trade is always aggressive, and today might make it a little more volatile, but also that volatility also can create opportunity, and with that comes risk. So this is the first trade. Let me show it to you. So this is the developing volume point of control, and what this is it's the highest volume at this time. So it measures volume. It's not clock related, it's not time related, and these rotations are not time related. They're just buyers and sellers, and we see the interaction. So let's look. RTH open, 8:30 Central Time. By the way, I'm in a different time zone right now. Makes it kind of interesting. So up, down. So the yellow line is our retail price. So you can see this is 10 seconds in. So this thing is what's going on. This is a shift lower. The shift lower says there's more volume here than there was up there. And that's common sense. We're open 10 seconds, not much going on. And we spent more time down here. So if the market goes down and we have more volume, the question becomes, is this selling volume or is it buying volume? Well, let's try to figure this out. We have resting liquidity here. We have liquidity come in here. I've got selling liquidity up here and this. So then when I'm looking at this volume, I'm looking to see which side takes control. So right here's my first suggestion here. So I have absorption here. There's the icebergs. This is selling delta, a selling iceberg. So when we see sell delta, those are market orders, aggressors, and stops. So sellers, which is them, most likely not going lower. Market moves higher. New retail price. Sellers hold the line here. They're being absorbed. This is the stop and iceberg detector. Very cool. Breaks high. So now what do I know? This is too low. I'm going to label it. I'm going to call it a variable high volume node. Might be relevant, might not. We never know. And again, guys, I am on a laptop at the moment, and that wouldn't be such a problem, except I can't see some things. So I'm really kind of working here, as they say, in the blind. So new retail price, break high. This is a long. So here's the evidence, and this is a very aggressive, advanced concept, but I like to share it because when you understand market mechanics, you can then begin to understand what it says. Market mechanics is language, and when you combine that with order flow, I believe, at least it has for me, gives me an advantage over other traders. It's been a long morning here already, guys, with tech. Sorry. So this is a long in the trader lab. Now, let's go back. Let's look at some potential targets, assuming they're here. Overnight volume point of control, and then ETH high. So this is trade, and this. So these are the initial targets on this trade. So we're looking for the short squeeze. Well, let's see how this plays out. So, as I said, this is a very aggressive trade, and it's very easy to get picked. I call, stop pick. So when you open, you can get the rotation up, the rotation down. Because if we get buyers, why wouldn't we get sellers and get a counter rotation? So I always assume I'm going to get the counter rotation. So I know there's liquidity out here. I know my overnight mid is down here. And if I choose, I can have my stop out here. Now, the thing about it is I do not put my stop here. I have to go look a little further. So I would be outside. Just telling you where I would keep it. And if I get run over, I just get run over. Just take a stop. It's not a big deal, other than how you feel about it. So here, and this is the target. So the way this would work is if you took the long, you get risk neutral. And that's always job number one, especially on the opening trade. And then you're going to go here. This has a high probability. And I'll give you a little statistic. You have to vet everything for yourself. But there's about an 81% probability we get there. And getting to the overnight high, about a 76% probability. So statistically speaking, that's a good trade. Well, thank you, Marky Mark. I'm in San Miguel de Allende. Hope I said that right. De Allende. Or Deos de los Muertes, and I'm probably saying that wrong. For Day of the Dead, and it's a this is a beautiful town in Mexico. So up here, run into liquidity. Now, this is where order flow also helps. So we're coming up, no way to know here. But right here, we get a break, hit the VWAP. Now, here's the possibilities. Hold the bid in the VWAP, but our resistance is this right here. It's too high. So anyway, down you go, out you go. Nice, thanks for playing. We'll see you later. So where do we run into? Look at the resting liquidity down here. So if you're using order flow, and I got to show you this, you would see this in the book. It's resting, and well, I'll tell you, a laptop it's not quite the same as being back at my trading workstation. I'd say it's a little challenging. And I have multiple monitors here also. You should see getting that on the plane and a carry-on. So absorption, break high. This is a microstructure. This is a triggering structure. It's right here. Hold on. Let me see if I can get some other things working here. Not necessarily. Okay. Going to try this for you guys. Sorry about the tech problems. I hope to have this all squared away for tomorrow. So this is the high volume in here. So this is a distribution of volume. And in the profile, the way it works is when you you take a tool like the profile, which is really measuring volume, and volume is very much like shopping. If you run out of sellers, and by that means that they're not offering the product at this price, you're going to run out. You can't buy it down here because nobody's willing to sell it to you. And now you have the liquidity and you see the icebergs. When you break high and you pull back, the volume in this structure right here, if we leave it, then we can come back here. If we can't get over it and we take this out, then we can continue south. That's what I know. I don't know anything else. This is called mean reversion. So this is mean reversion. So this is the mean. And the idea is to keep your stop under here if you vetted that. And then we want to come across the range. So we know we have two-sided range. We have both sides active. And now we have to go. We get a sell sweep, which suggests upside rotation. Notice the liquidity coming back in. And we still have our targets available upside. Overnight VPOC, ETH high. There's the overnight VPOC, high probability target. So when you're in two-sided trade, you just have to pick a side, And where's our ETH high? Did we get that? Can't tell. Oh, not yet. Okay. So the buy sweeps coming up. When I see buy sweeps, I consider the possibility of a counter rotation. Now, this is something that I'd like to point out. How do we use order flow here? I mean, how do we put these elements together? Let's come and look at some elements here. Part of the way I think is conditionally. In other words, if this, then that. If not, then what? Well, if this liquidity is going to absorb the sellers, then if we come up to it, it can serve as resistance. So this liquidity is here. It's a nice slug of liquidity. I break through it. Now I'm going to draw a little box for you, maybe. So when we get through this, it can act as support. This is a liquidity trigger. So break high, and I'm suspecting that I'm going to go higher, right? Support. Let's watch. That's a liquidity trigger. Now, let's look at it from over here. I come up to liquidity. I get the sweep. Now, when I get a sweep like this, I'm anticipating a downside rotation. Now, of course, the issue with all of this, and notice the liquidity comes in back here, so we'll see what happens there. What we're anticipating is rotation. Now, the thing is the trend up here? Is the trend down? What are we doing? Well, we're above this. We're above the overnight volume point of control, which is the retail price from the ETH. And if this becomes too low, I can continue on my merry way. This suggests counter rotation, and I need to be conscious of this level here. Let's just mark it. See? Interesting, isn't it? So support, potential resistance, counter rotation, back. Remember what I was showing you here. This break high, support here. Break low, resistance, order flow. So right here, this is something that you have to vet. If we're creating or trying to understand how we can maximize order flow, and we have the sweep and this, we can now use it as resistance. You guys should be screenshotting this because I'm showing it from both sides, okay? I'm showing you an order flow event that you can research and build into a piece. So you can see this, and now you see the opposite here. There, okay? So it's a way, and you can integrate that into a plan, but you have to vet it like everything else. VPOC migration. Now this VPOC migration, in a way, you can think of it the same as this. Now they're not related. This is representing volume. This is also represents sellers. So, but it's going to create volume when they interact. But just like this, what's the reaction to it? This is about reactions and locations. A reaction and location. A reaction and location. So screenshot that, put that into your order flow triggers, and then you get the retracement. Now, subject to your plan, you could be out of this thing. You could exit it here if that's vetted, or you go for the ride and you have this. Now, let's move to another piece. VPOC migration. Little data hole there. So this, when we break below this, that's potential trouble. The idea for this would be similar to that, would be that we would break, test it, and push away from it, but we go the other way. That's a problem for the long at this time. And then what you want it to do when it comes back here is you do want it to keep coming up. Instead, we consolidate, break low again. At this point, if there was any doubt in your mind, subject to how you work your plan, this would be a catch you later. You'll get a postcard, and off you go. Now, you have to have these things vetted. They have to be built into a trade plan. It is not a video game. It's very much understanding what these behaviors mean. And that's really what this is about. What does it mean? Not what it'll do. Trade with statistics, if that's your plan. That's what I do. because I know there's a high probability of certain things happening. What we don't know is number one, if they will happen. We also don't know when and the rest of it or how. So that's part of the thrill, of our business. And when I say thrill, I'm doing that a little tongue in cheek. So now, where are we? Too high. So here, too high, right here. Any doubt is here or here. Okay. So if you're still long, this is the time to find the exit. And because now we found too high. Remember what this represents, the retail price. Well, where was the last retail price that was too low? It was down here. So let's see if that's too high. Now this is very interesting here. Where was too low in the microstructure? It was here. That's the low of the day, which is here. So that volume took place right here. So that's where we found too low in the microstructure. So now I get my absorption here. This would love to know, but the data went. We'll see you later, Tom. We'll call you back. And now, where do we come? Here. And notice the liquidity comes right in here. These are not coincidences. They're, as I like to think of them as a researcher, am I still okay, by the way, in YouTube, guys? I'm not sure here at the moment. Can you post that in Discord? Let me know. Support. Microstructure, support. See the behavior? Okay, thanks, guys. Thanks, everybody. Thank you. VPOC migration. So this tells me here, when I get this, that it's two-sided trade. So in your plan, if you know you're in two-sided, you really just have to. I always pick a side, and it's just for me. Thanks, Randy. I pick a side, and for me, the side is the long side because it's the dominant side. And this isn't a recommendation. I'm just talking about why make this so complicated. I mean, it's up to you. I find that if I'm concentrating on one side, I'm processing what I perceive to be the dominant one. So even though if we're in two-sided, and if things really change, I could turn around. I'm going to be using shorts for exits, and then I'm going to be looking for longs because the market is short. And as long as I perceive the market is short, that gives me a potential edge for the squeezes. So when I get the counter rotations, and anything can happen, all the time. Thanks, Stephen. I'm just going to take the longs. And that has nothing to do with what other traders do. You can trade both sides. And I also trade both sides. But when I say only take one side, I'm trying to help developing traders because your ability to respond to change is not quick when you're in a learning stage. It's going to be very much rule-based and step-by-step kind of a thing. You're not going to develop that intuitive side of it. That just takes time. So if you focus on a dominant side, I think you'll find as a developing trader, because what you want to do is you want to prove the concept to yourself that you can learn order flow, that you can understand market mechanics, you can develop trades, and I've shared 60 PDFs of structured trades that you can review, and then you can research, and you take one trade. The most active trade type that I have observed, and if you guys remember from the stream on Friday during the Acapulco cliff dive, that is mean reversion. So basically, you wait for the market to counter rotate, and then you align with a dominant side, if there is one. And certainly we had a dominant side on Friday, and that was later sellers. So it would be counter rotation, squeeze the weak shorts, and then get aligned for continuation trades. For me in this, and what I suggest for developing traders, and you always have to bet everything and find where your groove is to only take counter rotations for continuation. It allows you to pick one side of the market and concentrate on it. Just something you to think about. And if you're flipping like a cat on a hot tin roof, that might not be prudent until you master one side. If you can't trade one side of the market, how are you going to trade two sides? You got to start somewhere. You got to build your confidence and your statistics. So, VPOC migration, too low. New retail price, too low. New retail price. Statistics, still going for this. Now we have this thing. Let's come back. I want to make sure I didn't miss. Okay, it was this. Here, let's look at this. This is interesting. One of these days, Bookmap, they promised me they're going to do this. Now, and they do keep their promises. It's just, when. That these will go, and I don't have to lose them, and then we can. And I know you guys in Trader Lab have been asking for this for quite a while also. So hopefully they'll do it. But it's not as easy as you might think it is. They have to do some stuff with the interface. So this was remember this, too high. Return, too high, too high. These are tools or ways to understand participant behavior. That's why these are so important. Because if I know that I had my sellers here and now they're here and the liquidity is here, that's why, let's look, I want to show you a little more. And again, apologies for the stream today. Things are definitely out of whack here, but they'll be better. There's your sweep that says potential counter rotation right there. There's your resistance and the liquidity there. Selling icebergs, and more liquidity comes in. And of course, you got this sitting up here. Who knows? And now we do the counter rotation to what? The retail price. If I take along here, and all these are structured trades. Now, what I'm not mentioning to you guys, of course, because this is specific to you, is what range do you require to qualify a trade? Okay. Sweep, support, long, 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 there. So I don't know if you want to take this trade. It's got enough range, and we do have a statistic open above. If I hold this, my stop needs to be under here, right here, because this was too low. This is the language of the market. Does that make sense? So longs, longs, longs. Now, and again, for me, and when I say me, I'm talking about developing traders in Trader Lab. Now, we have a lot of advanced traders in Trader Lab also, and they're going to be doing their own thing. But when you're developing, it is very important to set goals for yourself, to prioritize what you're going to, how are you going to build a business? The Trader Lab's about the business of trading. It's about using Bookmap, which is a high-tier order flow product, to integrate and get edge over other traders. Most developing traders start out with the typical stuff, candles and the only one thing you need, and mechanical and indicators. Fine. We've all done that, so that's a given. The thing is, we need those new traders to come in because we're trading against them, and we're not trading against the higher time frame traders. We can't. We trade primarily against other retail traders. What changes the elements of the market is, like on Friday, the higher time frame come in, and that's when you get these huge volatility in range. And as retail traders, most of the time we're not trading with them, but think of us more like fleas on the butt of an elephant. Retail traders are really like the minnows, and we're swimming in an ocean, and we're the little guys. So we trade against the other little guys most of the time, except when the big guys come in, we can catch a ride. And that's kind of what it is. So the process we use to trade against other traders, retail traders, is the same process for aligning. Notice I'm not trading against, aligning with the higher time frame. That's what you saw on Friday. So what you learn in Trader Lab is generic. What has to be different is when you get into outsized volatility, you need to know how to trade it. And it's not the same as trading this. Because, these rotations are more standard, regular rotations that we have. Friday was not, if you noticed. Is that making some sense? So sweep here suggests counter rotation. This is resting liquidity, and we're still trying to go here. We also have the IB. There's over 98% probability we take out either the first hour's high or low. You can take out either of them, pick one. But again, we're looking for the squeeze today. That's the primary objective. So that's what we got. So we have a couple trades in Trader Lab. We have the IB continuation trade. However, we have a sweep here. So the IB is set at 9:30 Central Time. Gonna make sure I'm in a different time zone, so I got all kinds of clocks going on over here. It's very weird. So we took out the IB right here by the looks of it at 10:34 and pulled back. This is a potential long. Back to the IB for a scale. Pull back here. Everything says you're okay on the long. Sweep here. Potential counter rotation. This trade could get taken out here, and it's not a recommendation. And the reason for that is this. So for us to go higher, we got to take this or they got to pull. So at the moment, and it's an even number, 6,700. It's a wonderful number. You guys remember 67 was a big number. So I can't, when it comes to for me, right here, if I'm looking at the IB trade, I'm going to be taking this one because I got support here and my IB is here. You must scale. And I think we took it out here. I can't really tell. Guys, when did we take the IB out? Was it just a little while ago? I can't tell. You can answer in Discord because I can see that quicker. So this suggests higher. We have a high probability here. On the sweep, okay, this is the, okay, thank you. All right, this is a long going for the IB stat, okay? And now this sweep is called range extension. Now, and that suggests counter rotation. So the idea of this is there's over 98% probability, and you have to vet this for yourself. We take out the first hour's high and about a 98% probability we get there. Everything says go north, be long. The problem naturally is what happens here. So since we can't know that as traders, all we can do is take our trades. So the long is from there to there. This is, if you take a long here, you've got to deal with that. All right, you could, and your stop would be under here initially, or you're holding a long from here, going for that. So if I took a long here, I'd be going for the IB stat, then I'd be going for that. Now the problem is this, so this nobody knows. And if I got long here for the IB stat, my stop is under here. And you have, here's the other thing that makes this even nicer. This is a sell sweep. So the sell sweep suggests the rotation up. The buy sweep, which happened on the IB extension, suggests the rotation down. That. There's your rotation down. Now, if we get through this, we got that. Let's see what else we got here. 6712 is an important number. This is a big number. This is a micro composite volume point of control. Let me see if I can do something here without making, if I touch something here, it's almost like daring. Let me see if this is right. Things are, yeah, I'm going to have to do some work on things here, guys, after the stream to try to get everything working again. So apologies for that. By the way, as long as we're here, and you guys know the trade already, we are working towards the ETH high, 6712, possibly. I can't confirm some of these levels, guys, because things got really barbecued over here. So we're getting through here. This is all good. I want to remind you guys that the there's a contest going on. You can win 3 months of Global Plus with stocks and futures data. And it's going for the month of October. All you got to do is take some screenshots of your trades, annotate them. You can get the blue jacket, which is very cool. And here's some stuff that other traders have done. I don't think we need help right now. You can do it on anything you want. Okay? So these are some really nice jobs here, guys. So if and if you're in TraderLab, guys, you're already doing this, right? So take your examples, stocks, futures, anything you want, crypto, and send them in, okay, with a description. And all you got to do is use hashtag #FreeBlueJacket and drop it on Instagram, LinkedIn, or X. And you get 3 months of Global Plus. It's a $600 value. All I can say is, come on, right? Okay, let's come back. So this is the next target. And I have to look up the food chain here and see if we got what else we might have up here. We have a single at around 6740-ish. That's a low volume structure in a market profile. Let me find it here for you if I can. 40, 41, 41. Now, the range has been so wide, what looks like a little bit of movement here. These are 5 points between there and there. See if we could do this. Okay, this is, let me try to show you what we're looking at here. This is Friday, needless to say, the Acapulco cliff dive. It goes so far down, my screen's not large enough for it. And now we're trading, this is today. So we are trading currently here. Now, when we get above this, this is a low volume zone. What a low volume zone is like there's been no trade. You notice how this thing is rotating? It's trading. In other words, it's what do we think of this? And then over here, trade. And but here we didn't have an auction. So when it rips like this, and this is where it ripped from. So we could potentially, at some point, come back here. And this is really where the news hit. It was actually a little bit up here. Remember, we were long early on Friday, and those trades were doing pretty well until the news. And then it was like, what happened? And then it was short, short, short. And it was actually a very productive Friday for traders in TraderLab who, had the discipline and also a plan. And you have to have a plan for what the unknown is, because the unknown is part of trading. So now, because this wasn't auctioned and it's skinny, remember what an auction looks like. It's got meat on the bone, volume. There's no volume here because the market was in a free fall. Once we get up into here, and we're into it now actually, we can accelerate. So once we get over this area, I would suspect, and it's not a recommendation, that we're going to start accelerating. So that's why for me, no shorts today, because the condition of the market is no auction up here. Market is short, and who's on the hit parade? Potentially the shorts. So let me ask you this question for you. You as the trader, if you were short, what would you be doing today? Isn't that an interesting question? Uh, Marky Mark, does trader psychology play a role at key levels, also adding because we all have the same bookmap view? No. We can see the levels, but different traders do different things, subject to time frame, really. As day traders, the fact that there's liquidity at a level, we also, many traders don't take the time to learn how to use the tool. The fact, and the other thing about liquidity, as you know, is we don't know what the intention is of liquidity. Okay, IB. Once you come back inside, we can come here. This is mean reversion. Now, for me, I have no shorts today. I'm not saying that might not be the trade of the century. It doesn't matter. What matters is the plan. So there's a few ways to work with this. When you come inside, it becomes mean reversion, but that's the mean. So for a short, for me, there is no range. So I don't take shorts today. I only look, and this again is subject to the plan, for long continuation trades. Don't forget, we have that low volume zone above us. We get in there, this thing could do the rumble in the jungle. You know what I mean? It could really go. So for me, I would suspect the better trades at the moment are longs. Now, if something really changes and we fall out the bottom or something, then, that's all different, right? But it's kind of like, if the condition is one way, other than the rotations, think of it like yesterday. There were traders, always, who want to pick the low of a move like Friday. And I've seen in my experience, which has gone on 47 years of trading now, traders who are actually, decent people and just throw their careers away. And the damage that can be caused, not only financially, psychologically, by trying to pick the low of yesterday. And when I hear that, and even in Trader Lab, there's developing traders who just have not seen a day like yesterday. A lot of traders develop, and I always say developing traders, and I'm a developing trader, but a lot of traders don't have any idea what they're doing because each element or condition of the market is separate. A report is separate than just, walk in the park here trading this thing, like by being long and not taking shorts today. But many traders just are mechanical, and they never take the time to understand the condition of the market. So they'll be mechanical, and that can work often. But there's conditions of the market when it's not going to work. And trying to pick the low of the day or get long or trade a counter rotation on Friday, as an example, would not have been prudent. Do you guys agree with that idea? That makes sense? So let's take a look. So far, market is long. I should say the trade is long. The trade is long. There's no trade at the moment. And these aren't specific recommendations. I'm giving you an overview of what the potential, the dominant side is, and the side to trade from. Unless, of course, you have a vetted plan to trade from the other side. And you can trade both sides, not the point. The point is, if you can't trade one side, you'll trade no sides. Does that make sense? So let's just keep watching, see what it does. The market can counter rotate. It can do whatever it's going to do. And of course, we don't know what it's going to do. Today is most likely going to be an inside day. And that being the case, I doubt substantially we're going to take out yesterday's low unless there's another news event. And taking out Friday's high, I think we might have a little time to wait for that. So it is not unreasonable for the market just to go into park. We could have a neutral day today. And it's not for me to say. Neutral day would mean we take out the first hour's high, the first hour's low. That is also possible today. But I think an inside day is fair. So it might only extend to the upside and do more squeezing. Once we get into this, we got to get really kind of in here, and I think that possibility exists. If the longs in here, which are all this, and you notice we didn't get these guys out. By the way, if you guys have Bookmap, take a look when we came down over here. I think it was around 64 or 62. There was a... take a look at what we did when we came down. If you guys have questions and you're in YouTube, post them. I'm not able to see things, and I can see questions in Discord. I can't stream in Discord. So if you guys are in Discord, you have a question, pop them in there. Goats, you made a comment about the book being dry. I'm not sure what you mean by that. Book looks just fine to me. We still didn't get the ETH high. That's pretty amazing. But has a high probability. And the high probability doesn't mean it will, but remember the market's short and we're going into a low volume zone. If we can get above here, there's really not much above us as far as resistance goes at the moment. So we got to get through here. Okay. So any more questions while we're at it here? And again, apologies for the situation here. Ben is asking me, how can we define if a sell-off is a switch in the higher time frame? Well, the higher time frame is still up, Ben. That has not changed. And this was a news-related event. So the thing about this is, what happens today? Because we could have had a lower open and continuation selling, but we have the opposite. So if we have the opposite behavior, then you need to always think about, well, who's on the other side? And the other side is going to be the sellers from Friday. So what we're seeing now are the sellers from Friday covering. And then what we don't know, of course, is how much more covering, or are we going to get sellers in and the market balances out? Remember what happened on Friday? It was an extreme move, and it was outside. It was a fundamental event. That's the way to look at it. We trade technically. Fundamentals disrupt the market. So that's what happened on Friday, Ben. So no, for me, nothing's changed. Doesn't mean it won't change. And the next few days are pretty important. Frontier, go to bookmap.com. You're going to see all the different ways you can licensing. This is Global Plus. It does everything but do the laundry. And also, it has all the bells and whistles. And if you want the stops and icebergs, which is a really neat thing, that's an add-on. And that costs a bit extra. And you do need MBO data. Hold on again, guys. A little rough when you're running on a laptop, I got to tell you. And then add that being in Mexico. It's just a bit difficult. So, okay. So the longs are still doing their thing, guys. This is now the other part of this is when you're in the market, what time frame are you trading? Are you trading just to take little nibbles out of the market, or are you trading? This is really an area here, 67, this up in here. So these are important areas. I mean, there's yesterday's high. I have no opinions other than we'll see about that. But today that would be a lot of range to cover. But anything is always possible in trading. So I keep losing the chats here. Let me try and get them back. Okay, sorry about that. How we doing in YouTube, guys? Yeah, thanks, Steve, for posting that. Guys, yeah, you should go to bookmap.com, look at the different packages. Also, if you are a subscriber already, don't forget there's a contest going on, and you don't have to be a Bookmap subscriber for it, but you can shoot your annotated screenshot of your trades. They could be on Sim. You could just take phenomena like I do here in the stream, outline it and annotate it, and post it on X, Instagram, or LinkedIn with the hashtag Bookmap Blue Jacket. And you get 3 months of Global Plus. I think that would be pretty cool. And data. It's about a $600 value, so that's something all of you ought to be thinking about. So, now the fact that the thing about having any tool is you need to understand how to use it, what to do with it. I mean, we've all had charts forever. And why do most retail traders fail? Because they don't know what to do with anything. They just think it's plug and play and next chat room or, whatever they do. I don't know. But we've all gone down the same paths, at different times in our as developing traders. And most traders get frustrated and they don't stick with anything long enough to know if it even can work for them because they have to learn it. And everybody's looking for the quick. The quick is FOMO. That's what the quick is. I'm in a hurry. Show me the secret sauce. Where's that holy grail? Go out on YouTube if you want to get nauseous because what you're going to find is a bunch of nonsense, as you know. Probably shouldn't have to tell you by now. This is a possibility. This is a single. And a single is like a gap in a 30-minute bar. Bar charts, you heard of those? This is where the market didn't come back and fill it. So those leaves, and that's because of urgency. And of course, Friday, there was a lot of urgency. That was like somebody yelling fire in the theater. So this is the current market, and I'm right on this edge. Now, this is already a poorly auctioned zone here. So I'm already into this. And what an auction looks like this because it's rotational. This is not auction. It's just a run. So the market then what the market tends to do is when it has a run like this, unless of course something has fundamentally changed and then we don't come back here, but under these conditions, then that needs to be auctioned. So today we could get up into this before the end of the session. So, and again, I don't predict, I don't know. I just, the idea of trading is you follow a plan, you look at the condition of the market, you understand the condition from Friday, you know the market is short, and what did you see here? The buyers were here. If there's urgency, then we might not come back here. Again, we might, if we don't go too far here, the longs in here could become sellers and we could take out the sell stops under here. What we're doing in a different time frame is we're taking out the buy stops above us. So they're buyers and we have new buyers. So we have longs coming in, us, or, some of us. Some of you might be selling, that's your business. And then the guys who are short in here are using counter rotations potentially to buy. So you've got buy stops, and then you have shorts that are still short up from up here that are using these counter rotations to buy. And then you might have traders like us who are just using the counter rotations also to buy. So that puts the lean to the long side, if that makes sense to you. And it's not a recommendation because you know how this is. You've been doing this for more than 20 minutes. Anything can happen at any time. So we just have to be prepared. But until it changes, as they say, it's not broke. So developing traders, pick a primary side, use a vetted trade plan with the trades you vetted, and see if you cannot become profitable trading with the dominant side. I can assure you, if you can't trade with the dominant side, you will not be profitable fading the dominant side. So proof of concept, guys. Work it out. Come to Trader Lab if you're not getting the results. By the way, everybody has random winning trades. That's not an issue. Gamblers win also, but they don't win over time. Trading is the same business. It's gaming. So you really need to be thinking about how do you get an edge and not trade when you don't have edge. Pressure skews the book. Let's go back to where so still longs, Now you are going to get these rotations. There's nothing you could do about that. We're still looking to get to this thing. It seems to be having a hard time. So, will it? I don't know. But ETH low is there. Which one do you think is more likely with a 98% probability? You have to think like that also. What's more likely? Well, I'm leaning here. But again, I don't know. Well, as far as I'm getting a question from Marg, I think it's Marg. I hope I'm saying that right. Should you buy at low volume nodes or high volume nodes? Well, low volume nodes are outside edges of distributions, and they're created by this kind of behavior, by urgency. And when that happens, they're not auctioned. So we can come down into them and under them. This would be the outside edge. And safer is even under here, because then we'd have to fail this volume. This is volume. This is a wall. I'm not saying it's the Rock of Gibraltar, but it's a wall, because we auctioned this and the buyers took control here. So the buyers were here absorbing the selling, and here also absorbing the selling. So this is support. So if I come under here, and you notice how we came down and then we went up from here. So I know I got support under here. So if I'm going to get long anywhere out here, it's going, it's not going to be at the location. It's going to be when it comes into the area. Hope that answers your question. The best way, facts of life, the best way to learn the profile? Well, come to Trader Lab. I think you'll learn a lot about the profile there. And also, what I do in profile is not necessarily the institutionalized version of it. Um, Over the years, I mean, it's almost like anything else in trading. You learn and then you tweak and tune, and through your own experience, you develop um, confidence in certain processes and other things you kind of jettison. Um, you'll see there's not one way to do anything in trading, but the simpler you make it, the better it is. Because I know early on in my day, as I was developing, I thought created more certainty and squeezed the risk out because everything was successful randomly. So any indicator you want to use, pick anything. When you open your toolbox, your software toolbox, you're going to see maybe 200 indicators in it. Why are there 200? Well, they all work randomly. So, but none of them have an edge on their own. So when you put more than one together, now you've put two random elements together. When you put 5, I mean, just take the number, and then it's an exponential randomness. Well, if the market's random and you're using random inputs, you just have noise. You have nothing because there's no edge in something like that. And you'll still have winners because it's random, but there's no edge. So the casinos, they operate playing games with an edge. They don't have random inputs. They don't change the games. They don't. So whatever the game is, they're not making it up. So that's really the way to approach the business. Then as far as market profile goes, the profile is a way of organizing information. So it's not an indicator. It's really just a organization. But we can understand, if we understand shopping, we understand the auction. If we understand this is our outside edge and it's here, we understand that the buyers were here, then this area, and this is not a recommendation, could be an area to get long, or not. I don't call trades, but I'm just saying is we have to look at the logic. And it doesn't mean we're not going to come down. Okay? That's the other thing. So what's the logic? The logic is shopping. If this yellow line is the highest volume for the whole day so far at this time, and I check it, and I get a sweep, this is another piece, that gives me a trigger. I can get a long entry here, if that's my thing. And now this moves up, new retail price. I have a sweep, I can buy it there. I can buy it there. And now what do I know here? It creates this high volume. So this auction right there at the time, and I always have to say at the time because things change, and it goes from we're going up to go, now it's going wherever it goes. And that's the nature of randomness. But I know right here, this is the fair price for the day because it's the highest volume. I think. Is this correct? Hold on. Sorry, guys, I got to check my levels here. 60, 94, 50. This is not correct. So the volume point of control is here. One second. Actually, this appears correct. Guys, can you confirm the volume point of control is 94.50-ish? Yeah, Mark, I don't think that's a serious question. So this is this is absorption here. There, I should say, is absorption. This is the location. You have 92, and you have 94, Matt. Okay. So I'm not quite sure what the retail price is. I think it's either 92 or 94. I'm getting two different numbers from two different pieces of software. It could also be here because of data things, problems. But so this is your backup here. This is where it was too low. This is the current distribution. If you come outside, then the idea is you might be able to look at this for reversion. So this is now an auction. This is where it was too low. We might be able to go here. Let's watch. The last long is here and here. So now we got to see if we hold the high volume up here. If not, we're going to come here and possibly down here. This is how it breaks it up. So it's this to this, and this is really important right out here. So this is where you want to see your buyers and not come below here. And remember the rationale. Buyers are here, buyers are there, buyers are here. So let's watch this behavior. How we doing, guys? Hope you're getting something out of this today. It's a little challenging, but hopefully we'll have this sorted out pretty well by tomorrow. It looks like my internet is now working better. I have not been dropping data. So, in fact, while I started streaming, they were actually here. Folks on ladders, running cables. This is almost like it's unbelievable. But hopefully this will stay stable. Seems to be stable now. The IB, we have a trade out here. And this one just seems kind of weak here for some reason. If it comes, once it gets under here, if we get under here, then we got this. And then we would have to look out here. So we'll see. Because what you can get here is if we come out here and hold this volume, we can come back up. That's one possibility, and we're still looking for this. If we get through here, we can go here, and then we come out here. So what you have here is, if it comes out here, it would be to there and then back up the food chain. If it holds this area, then it's back up the food chain. So these are the locations for long trades. It's just it's just possibilities. The thing with the trade is any trade you take, you need to know before it gets there that you're going to stalk the location. This is one location. This is the other location. This is the other location. So you've got this for potential longs out here or here to there, up, out, or you have here. This is your support to there, and then up. So far, that's it. So in your trade plan, you would already know where your trades are going to show up. You don't know anything as far as what will happen. Do you guys actually have trade plans? You know where your trades are going to show up, or are you making it up? If you're making it up, you're playing a video game. You're wasting your time. Uh, so you only have a certain amount of time and assets. So uh, use your time wisely. Don't waste your assets. So how do you use your time wisely? Well, maybe you need a trade plan, and maybe you need to know the condition of the market, how to define it, and only take trades in alignment with that current condition, which can change, and subject to the time frame you change. Now, by the way, a lot of traders think scalping is the way to go, and that's what a dopamine fix and and high win percentage. In trading, it's not the percentage of winners, it's the yield or the risk reward. So, subject to your plan, you're going to be looking maybe to get long, down up to here, so 5, 6. That's it. This is a 10-point trade right here. Right here. Is that something that would work for you? Yeah, Richard, you're using absorption. Well, the market is always absorbing. The thing is that there's an aggressor and a passive side. So there's always absorption going on. The thing that's important is the locations where it happens and what other structure do you have around it. So absorption on its own. For example, this is here. Well, if we come up into it and they absorb it, we may only, and then rotate, and then they'll pull or you take it out. So the fact there's absorption isn't in an isolated. It is not isolated. So all of this is absorption. This coming down here is absorption. There's the icebergs. There's the sell stops. That's what creates the delta coming down. You see the delta. That's the aggressors. That's the sell stops. Their market orders plus shorts. Who knows? And then there's your passive side. So absorption is happening right there. When you see this delta, why isn't the market going down? You see, that's absorption. Mark, if you're asking me, can you be successful trading gold? You can trade anything. Doesn't matter. It all works the same. You just have to adjust to the volatility in the book. So if the book is thin, you're going to get skidded. You just have to allow for that. If you're trading, just like trading the NQ, you trade the NQ, they'll call you later with a fill. Delta divergence. James, what about delta divergence? Well, let's see if we can. Yeah. So coming down here as an example, there's your sell delta. Nothing, nothing. You got a buyer here. Right there looks like it may reverse. It doesn't. More selling. Here you have sellers, sellers, sellers. So delta divergence as a good example, Jim, I think maybe this is what you're talking about, maybe, is that you have less delta and you have a lower price. That's absorption because we have less aggressors. So what you have is passive buyers. Limit orders are passive. Icebergs are passive. So these are the passive side. These are the aggressors. There's the absorption. And there's your absorption. More sellers. Here, lower price. So you get delta divergence. And that's your absorption too. Because there's less negative delta. Remember, aggressors are delta. Less delta, lower price is the absorption. And it's also divergence. Then you get your buyers here. So this is also a long here, which it was. But and here's the other part. The location. Think real estate. If you think real estate, that's why out here is a long, that's real estate. Location, outside edge. What was down here? And remember, this is the last long, right? I think. And this is our high probability statistic, so that's why we're going for this. Is everybody tracking? We doing okay? So if you were sitting long, how would you be doing? Wasn't this a long down here? Wasn't this a long? Yeah, it was. This is for the IB. So we had this for long, this, 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 this. These are all longs. Okay, those are Trader Lab trades. You guys can learn that if you're interested in it. Yeah, Jim, that was the divergence. So, and where are we now? Let's come back to our profile. We are now in the thin zone. The thin zone, now we can accelerate. That's not a recommendation, but the reason you get acceleration here is there's nothing there. It's like thin air or a gap. Very similar behavior to gaps because basically while the price moved here, it's gappy because there's no volume. So there's nothing to hold the market back. Now we have a little hiccup here. Somebody must have grabbed a little a gulp of oxygen right here, but that's not resistance. There's nothing up here until here. So that's the single I pointed out to you. Now, again, it's not a recommendation, but we'll see. You guys have all day. I'm just about out of time. I hope you got something from today. Apologies for the technical issues. I hopefully will have these all resolved by tomorrow. Please give a like if you're visiting in YouTube. Don't forget about the contest that's going on. You can win 3 months of Global Plus. Go to bookmap.com if you are interested in that, and that includes data and a blue jacket, Bookmap blue jacket. I have one. It's very nice, very nice. In fact, where I am here in Mexico, it's in the mountains, and I hope I don't murder the name, but it's San Miguel de Allende. Yeah, I got it, and I'm here for Day of the Dead, which is a beautiful tradition in Mexico. It's like 55 degrees in the morning, and it's going to be almost 80 degrees. That's mountain living for you. Beautiful place, unbelievable. So, but internet, these things can be challenging, but I think we might have it under control. Fingers crossed, and all other body parts that are available. Please give a like, and Trader Lab, I'm going to make this stream available, and those of you who are visiting in YouTube, you'll be able to review this, and hopefully tomorrow I'll have more things working here so we can dig a little deeper. But these are structured trades. The idea of the Trader Lab is to help traders understand the business of trading. There's no secret sauce. This is not complicated. This is really actually, trading is kind of simple. What is, I think, the more complex element to trading is us, the discipline, the psychology, the emotional wear and tear, the FOMO. I believe you come to Trader Lab, you can learn how to trade. And then you're going to modify it and adjust it to your psychology. You're going to make it your own. But it's kind of like learning to ride a bike. I remember learning how to ride a bike or drive a car. It was very much, you start out incompetent, then you develop some competency, but it's conscious competence, in which you learn how it works. But you have to think about everything you do. But in this business, you're doing the same thing, but you're also vetting. You're recording the trades. You're finding the structured trades that give you a positive expectancy or edge, and you learn those and you become proficient. When you become proficient, you develop unconscious competence and the ability to understand and to have a deeper understanding. So you're no longer mechanical. You now become professional. And in the Trader Lab, You only need one trade to become professional and do a proof of concept. Build the foundation, understand market mechanics, learn how to trade. There's a lot of successful traders in Trader Lab, and it doesn't matter how long you've been trading or what you do, bring it. There's a link in the bottom of YouTube. You can use that to access the Trader Lab community, and there's a lot of other education available at no cost. Please give a like on the way out. Don't forget what we're looking for here, the market to go higher, up into possibly the 40s. This is the target, and that's not a recommendation. It can keep going. It can do anything. Then we have 83.5. This is the next target. And none of this ever has to happen. This is the next target for today. And all I can say, guys, is trade with the plan. Don't gamble. If you're going to go gamble, go to the casinos, get the cocktails and the ticket to the buffet. When you're here, this is business. Treat it like a business, not a video game. Learn to trade. And if you know how to shop, you already have the foundation of trading. Thanks again, guys. Look forward to seeing you tomorrow. I appreciate your indulgence for the technical issues, and I'll see you soon. Don't forget the like on the way out. I'll see you soon.